Well, steady consumer spending, a strong labor market, and the Fed's insurance cuts all point to continued growth, according to our next guest. Despite resilience, could we see a recession? Let's welcome in here Dryden Pence, Pence Capital Management CIO. Dryden, always great to see you, especially on set. I want to get your take on the U.S. economy. First, I do want to get your take on these headlines, U.S.-China trade tensions, Dryden. It's interesting because I think a lot of investors had thought, you know what, things are going okay. The two sides are talking. To some extent, I thought it actually kind of moved off the radar. Now it feels like those tensions very much back on the radar. You got the new post from the president saying he believes China purposefully not buying U.S. soybeans. That's an economically hostile act. Says we're considering terminating business with China having to do with cooking oil and other elements of trade as retribution. You're an investor. You actually have to put money to work in this market. How do you navigate all this?
Well, I think the first thing we look at is you've got to kind of look deep and long and recognize that there's some fundamental issues that are underlying all of this. And the reality is that China's trade with us is 2.3% of their economy. They don't trade with us, they go into recession. Our trade with them is about 0.5%. So if you look at this battle and this war that's going back and forth, it's an economic war. And the point of the matter is we have a much stronger hand. They need us more than we need them, period, end of story, full stop. And if you kind of step away from this, you recognize that what we're seeing is a lot of noise, a lot of words around a battle, but in the general war, we're probably going to win.
So what do you, as an investor, do you say to yourself, I'm going to see these posts, I'm going to see these headlines, but I'm going to look through it, it's noise, and just focus on earnings?
Exactly. Because you focus on earnings, you take a look at the fundamentals. You know, a lot of this, I call it the frazzled cat syndrome. The market's it's true, the market's at kind of a high. You get any piece of noise, everybody goes crazy, they're upside down on the ceiling, they panic, they overreact. And so that's one thing we've been saying for a long time, buy chips on dips. And be in the situation that when people are overreacting to these things, back up, look at the fundamentals, look at the earnings, and then make sure that's what's driving your.
Do you think, in some sense, is this market kind of coiled or positioned to overreact because market concentration, because of valuation?
Absolutely.
Yeah.
I mean, because particularly when you get to the top, when the pricing is a little bit ahead of the earnings, and we're looking at, people kind of wonder what's next. But we're going to see earnings probably be very good as they come out. Or we just started today, right? And then we're going to continue to see earnings in the next couple of weeks. And I think those are going to be pretty good. And we're going to be looking forward to predictions are overall for the S&P 500. Earnings are going to be up 10 to 12% next year. So, you know, earnings at an all-time high means markets are at an all-time high. And I think people have to just kind of recognize when we get to these peaky moments, folks overreact. Sometimes people are irrational and they overreact. And then for us, we look at that as an opportunity.
Let me ask you about the U.S. economy. You say, you say no recession in sight. What explains that resilience in your opinion?
Sure. What
gives you the confidence in that resilience?
Three things. First of all, we're still in the early stages of burning off all of the COVID. You know, we put $5.4 trillion into this economy in 1 year, 5 years ago. That's more money than we put in World War II. The multiplier effect on the stimulus of World War II went all the way to 1974. We're just 5 years after what happened with COVID. So underneath this economy, you still have all of that stimulus and the multiplier effect that's still working. So that's the first thing. The second thing is you have labor productivity at an all-time high. That's helping drive things forward. The third thing is you have a cycle where the Fed is beginning to lower interest rates. So you have a generally good economic stimulus level. You have the Fed with plenty of dry powder. It's not like 7 years ago where they were at zero, right? So they've got room to stimulate if they need to. And then you have this moment where labor productivity is up. We've added 7 million more workers in the last 5 years than we had before. That's the entire labor force of Illinois. That's the equivalent of $3.1 trillion of additional income. That's like growing France over the last 5 years. So you have all of these big underlying things putting a base under this economy. Yeah, we're going from a torrid pace, which is like, if you're driving a car at 90 miles an hour, you slow down to 50, you feel like you're going 0, but you're really moving 5 times faster than you can walk. So we're moving from a torrid pace to a sustainable pace. And that sustainable pace is going to be pretty good. And you have a Fed lowering cycle, and you have labor markets are in balance.
So let me ask you this, I'll get you out on this. Your clients come to you, they say, okay, economy's hanging in there, earnings are solid, Jay Powell's cutting. What's the risk? What am I worried about? What do you tell them?
You're always worried about some anomalous black swan event, global risk. You have, a war goes off, somebody gets really crazy and does something. Those are the things that you have to worry about, but you always have those risks. But in terms of fundamental risk, I don't see a lot of fundamental risk in the economy so long as we're kind of moving things through deliberately. You could have a huge policy mistake, and that's Washington. But other than that, I don't see a lot of things to be worried about. But you have to recognize we are slowing down. But it's to move to sustainable pace, not torrid.
Dryden, always good to see you, especially on set. Thank you, sir.
Absolutely. Thanks for having me.